David against Goliath, and so this is a very nice win for us. Now, we're not finished, and in fact, in our business, what's interesting is the wirehouses which dominate our customers. So Morgan Stanley, all the advisors at these wirehouses, Morgan Stanley, UBS, Merrill Lynch at B of A, Wells Fargo, not one of them has approved Bitcoin on its platform. That hasn't even happened yet. And those are our primary clients. When that happens.
Cathie Wood started ARK Invest and is now its CEO and CIO. ARK Invest is an investment management firm that runs a number of actively managed exchange-traded funds built on disruptive innovation. Cathie and her investment management firm have a lot of money in Bitcoin. The American investor says the huge success of the spot Bitcoin ETFs has made her even more optimistic about the leading cryptocurrency. A few years ago, at a Singularity University conference, Cathie predicted that Bitcoin would be worth $1.5 million in 2027. We are still about 3 years away from that, but Cathie still thinks there is a lot of time for Bitcoin's price to rise. Cathie says that the huge rise in demand for Bitcoin due to spot Bitcoin ETFs makes it almost certain that prices will go up a lot in the next few years. Cathie thinks that the price of the most popular cryptocurrency will skyrocket by 23% in the next 36 months. In her conversation with Peter, Cathie also talks about the success of her company's ARKB Bitcoin ETF, which was one of only 2 Bitcoin ETFs approved by the U.S. Securities and Exchange Commission in January. According to new data from BitMEX Research, ARKB is the 3rd Bitcoin ETF by total flow in assets, with $2.038 billion in assets and $1.56 billion in flow. The ETFs have been very successful so far, but Cathie says they are about to get even bigger when a certain group of brokers start offering them to their clients. We will now show you clips from Cathie's interview, but first, please take a moment to like this video and subscribe to the channel.
And this is not just a technology. It's a new asset class, right? And beyond that, it's a global monetary system. It is the first global, private, meaning no government oversight, digital and decentralized, rules-based. That's the most important word here. Rules-based monetary system in history. It's a big idea. We did something called Bitcoin Brainstorm. We do a Bitcoin brainstorm monthly, and one of them was the convergence between Bitcoin and AI. And we had, you'll probably know of his developer name, Roastbeef, from the Lightning Network on, and he was talking about how in Africa already this convergence is redefining division of labor. The gig economy we understand here in the United States, put that on steroids in terms of micro gig economy in the emerging markets. And you have a whole new kind of economy. So yes, very exciting. Well, we have all kinds of metrics, but when I was at Abundance, the forecast was, our bull case was $1.5 million in 5 years. So that would have been 2027. We still have time. And we still think that's going to be right. If you just look at the institutional push into Bitcoin, this new asset class, they have to consider it as fiduciaries. When you use those code words, new asset class, what it means, the correlation of these returns are very low compared to those of other assets.
Cathie can't wait for wirehouses like Merrill Lynch, Morgan Stanley, and Wells Fargo to start offering these spot Bitcoin ETFs. She thinks that would be a huge deal for ARKB, other Bitcoin ETFs, and the underlying cryptocurrency. Luckily, recent reports from Bloomberg suggest that that moment might be closer than we thought. According to a report citing sources familiar with the matter, Merrill Lynch, the investment arm of Bank of America, and Wells Fargo's wealth management unit have started giving certain clients access to spot Bitcoin ETFs. These clients must have brokerage accounts and ask for the Bitcoin ETFs specifically. It is also said that UBS Group is giving some of the approved spot Bitcoin ETFs to some wealthy clients with brokerage accounts without their asking. Bloomberg also said that Morgan Stanley is thinking about adding spot Bitcoin ETFs to its platform. The fact that these companies are changing their minds so quickly, less than 2 months after the products first came out, shows how popular they have been. Let us go back to Cathie's talk.
Absolutely, absolutely. And so they have to consider it. Now, what are we saying? There are 19.6 million Bitcoin out there right now, and the highest it will ever go is 21 million. Okay, there's real scarcity value. And what is going to happen? The price increase for every institutional dollar pushing in now is going to be much higher than it was last year, 2 years ago. It's, we're going to get into, if these institutions really want to own it, what I found fascinating recently, just learned it this morning, is typically when you go through a price move, a Bitcoin price move to the upside, you usually see long-term holders, which is a metric we monitor. It's an on-chain analytics metric. And it means people who have not moved, or wallets that have not moved their Bitcoin in 155 days or more. Yes. Well, normally when you go through a price move to the upside, a very nice one like we've seen in the last year, that tends to start moving down. And it did that, true to form, but it has reversed in recent days because what we learned is GBTC sold some of its Bitcoin. So those wallets hadn't been changed in a long time, right? Now that is done, at least for the time being. Now that is done, and it's going back up again as the price goes up. That's highly unusual. And I think it is because the long-term holder is saying, why would I sell now when I know all these institutions, which own nothing in this realm, in this new asset class, they have to consider it because it is a new asset class. Let me tell you a little story about Bill. In 2017, when Bitcoin was below $1,000, and there was a war going on between the Bitcoin maximalists and, those focused on the Ethereum network. Chris Berniski, you may know him. He was our first crypto analyst and went off to start Placeholder. He decided, you know what? We should have a meetup at our office between the Bitcoin and Ethereum supporters, and we'll provide rules of the we'll provide rules of the road. And Bill was the grown-up in the room, set the tone from, the Ethereum side. And we had such a productive talk that I went out and bought Ether right away. I already owned a lot of Bitcoin because it was so convincing that there's a place for both. And
Bill is a brilliant adult in this space. Yes, for sure.
Yes. And so yes, we're very excited about the Ethereum network and Solana. And so they all play different roles. And what I love is there's kind of a little competition. I think competition is always good to keep the other networks honest. And so, yes, we think that decentralized finance, and we do call it now the internet financial system, which is really a Chris Berniski coined that. Yeah, we're saying, okay, let's try to figure out how many steps it takes for a merchant or for a consumer to pay a merchant. And that was 9 steps, including the 2 of them. And that's, and there are many other middlemen, but these were the most direct steps. And that is a 2 to 4% tax on every purchase in the world if you're using intermediaries, credit cards, and so forth. So just think about that. Cutting, that tax rate dramatically is going to increase access at the Wright's Law and apply it to industrial robots. what we see is based on the 50% cost decline for every cumulative doubling in the number of robots out there, we believe that during the next 6 to 7 years, that space is going to grow the fastest, even faster than AI. Now, this is from a market valuation point of view. I'm talking about how it's valued in the marketplace. We think by more than 80% per year on a compound annual rate, whereas we think all of disruptive innovation will be growing 40% from roughly $20 trillion now in the public and private market. And Figure AI, we have taken a position in our venture fund there. So from 20 trillion to 220 trillion by the year 2030. So that's a 40% compound annual rate of growth. But generalizable robotics is going to grow the fastest.
The news that wirehouses will soon offer spot Bitcoin ETFs to their clients hasn't just made Cathie Wood happy. Earlier this week, senior Bloomberg ETF analyst Eric Balchunas said that wirehouse platforms are seriously looking at adding the ETF soon because of huge demand from their clients. In an interview with CNBC on Thursday, Bitwise CEO Matt Hugin also talked about an even bigger wave of institutional demand once major wirehouses start to offer Bitcoin ETFs. Find out Hugin also talked about Bitcoin's supply and demand imbalance, calling it off the hook. He said that there is too much demand and not enough supply, which means that the next wave of institutional interest would drive the price much higher, possibly even past Bitwise's initial $80,000 2024 prediction to hit anywhere between $100,000 and $200. 000 or even higher before the end of the year. What do you think about Cathie and Matt Hugin's super bullish prediction for Bitcoin in 2024 and beyond? Please leave your thoughts and comments below. Also, make sure you like this video, subscribe to the channel, and turn on post notifications to see more videos like this. Thanks for watching.